that is incurred, it is crucial to understand what are the various costs that are involved in each of these and how do they behave and how do we control them in order to maximize these profits, either EBIT or PAT. So this is the whole concept that is being discussed in costing. How do we play around with this? What is that we know about it? How do we make it better and how do we gain benefits out of it? This is the fundamental thing that costing speaks mostly about. And so for any questions or anybody want to add anything? Okay, looks like no. Then we will continue. So any organization can.
How was it?
Sorry.
No, I said, did you guys write an exam for this?
Not yet. I think exam is in the first week of January for all of us.
Oh, okay. Okay, best of luck. Let us know what did we ask.
Sure. So here, any organization typically falls into one of these categories. There are merchants, there are manufacturers. So for merchants, what do I mean is they normally trade. They buy goods from one entity and give it to another entity. They have a margin to get benefited from and they pay around. On the other side, manufacturers are mostly who try to get raw materials, convert them to inventory. They do a process of an activity, set of activities here, and then convert them to inventory, and then they sell this inventory. So, for example, there are 10 raw materials used. There is some money used in processing it. All of them, if you add, that is the cost of this inventory, which is also called cost of goods sold. So this is a process that happens in any manufacturing organization, but in merchant organization, it's only a trade. They buy from somebody, sell from somebody. So in costing or management accounting, the key focus is here because there is not much to do here. I mean, it's straightforward or very simple costing structure they would have. So the key focus of costing is all in such uh, industries where we have this process of converting raw materials to inventory, understand what are the ingredients that's doing here and what is the work that has been done, how do they behave, and then how do we make an inventory out of it. So our full focus, I think, for today would be mainly here. And why do we do costing? So better decision making and giving targets. Maybe all of us know in our organizations we get targets at the beginning of the year. So how do we get these targets? Is basically they do a costing for their for respective organizations, understand how these costings behave, how can we optimize that so that we can maximize our profit. So based on that, they give targets, and these targets we work towards achieving it. In other words, I mean, in other contexts, you could also use this for decision making. For example, if you say one of the cost is related to rental that you pay for the production unit that you have. So you might have two options, either to outsource this or do it in your place. So you can do a cost analysis and see how your PAT is impacted, or to keep your PAT, how do you increase your pricing and still see if this product is relevant in the market. So as a management personnel, it is important that you understand the costing structures and you understand how they behave, and then you see you do a dry run to see if an alternate that is available today makes sense or not. So basically you run through this for different options that you have and see which is making sense. If you have a competitive advantage in the market, then you can still increase your MRP and go about it. But if you don't have a competitive advantage, it is crucial for you to optimize this and increase your PAT. So this is the gist of management accounting or costing. So anybody want to add anything here or any questions? I think if this is clear, the understanding of the subject will be fairly simpler, I believe. Okay, so I assume no questions. We will. Yeah.
Yes, so management accounting is then only for costing. The objective of management accounting is to understand the concept, or then
Yes. So the fundamental thing that you do is understand costing. Then you why do you do analysis is targets or make decisions in your organization. This is all about it. hope this example is fairly clearer. If that is so, then we can move on to the rest of it. So, uh, so I will be using the notes that I have made for myself, and I will for sure share it with all of you also. The same thing. Sorry for the bad handwriting, and there could be some grammatical and spelling mistakes. Please bring it to my notice. I will correct it. So, if that is agreed, then let's get into the concept. So, this is a very interesting story which a professor taught us, and I thought maybe I will share with everybody. So, when pyramids were getting constructed, the king then wanted to, when they wanted to construct a bridge uh, or dams across Nile River, right? So the king then ordered to disassemble the pyramids and use those stones to construct these dams. But then the person who was doing costing there was not so happy with removing these pyramids out and then using it for something else. So what he did is he did a cost analysis showing some false claims, telling that if you disassemble, bring it to the Nile River and then construct, it's going to cost you more. Rather buy new ones and construct them, then you will save money. And in that process, he convinced the prince, but he also saved the pyramid. So this is something which is like a good example to understand why we need costing. Rather, a very nice example to understand it. So all that he did is he showed if you remove stones from pyramids, what are the costs that are involved, and how will it impact your PAT? If you bring new fresh stones, how will it behave how will your PAT behave? So in this way, King was able to take a decision, but he was playing around, goofing up things here. He intentionally inflated a few things here and showed that this is going to be lesser here, and an alternate approach is going to be here. So thus he saved the pyramids. So I think such is the power of costing. So we will have to be very careful and understand a lot of techniques that are taught, so that we can also make use for our advantage in our organizations. So that being said, then let's get into this concept, three-stage concept. So financial accounting is something which is fairly clear, which says the past data. So if you go to any profit and loss statements, or for example, the one that I showed here, it's the past. So so it's, for example, if I say this is for 2022, it's past. So what happened in the organization in the past can be put in profit and loss statement. So that is financial accounting. So once the year is over or the tenure is over, you go sit, see what is your costing and put it here. But this is a crucial input for the next year where you do management accounting or costing. So you understand, okay, in my previous year's costings, these were the entities that exist. Maybe it will continue to exist today. Maybe if in some of these areas there are inflations which I have to account for. Maybe there are a lot of things that would inflate or deflate the value here. So I will have to do this costing for this year so that I can incorporate this in the price that I decide for the product that I sell. So you cannot wait for the year to end and fix a price to your product and sell it to your customer. So you should have a ballpark estimate of how much it would cost you. So basically what you are trying to do is you are trying to take the data of past years and try to understand how it could behave in this year, and you do attach a value to it and then say, for me to achieve this PAT, I have to increase the sale value or MRP of the product so that I remain profitable. So what you try to do is play around with this, or you do some innovation where you try to take an alternate approach and still hold the price constant. So all that is possible only after you do your management accounting or costing. And corporate finance is a bigger thing where, of course, it's not discussed here. Corporate finance is more about, for example, the return on equity. For example, as an investor, if I put 1 crore into this company, year on year, what is it generating? So it could be maybe 7 lakhs or 10 lakhs or 10%. What is the percentage that you are generating on the investment that you've made? So this is a bigger topic. So normally what happens is, for an organization, there will be multiple P&Ls you can think of. Maybe it could be divisions, or maybe it could be for each product you can think of as a separate P&L. So the organization try to play around in terms of corporate finance to see where to optimize PAT for various products that I have and still achieve the return on equity. So that is corporate finance. But in management accounting, it is limited to one of it, and you try to play around here. So far any questions or maybe quick feedback will help. Maybe if you are, can, I mean, what I'm explaining makes sense, please raise your hand so that it will be easy for me.
Akash, will share this document with us.
Sure, Animesh, I will definitely share, yeah. So, but I just wanted, maybe you can control shift K. If you do this, you can raise your hands this way so that I understand whether I'm going the right direction or something has to be altered.
So, like the gist of this course is to play around with the costing, but like some
Exactly.
questions that we face in this course is usually cost is already given, right?
Yeah, it is the historic cost that you get. For example, for the previous year, you get this cost, and based on that, you see how would this cost behave for the subsequent year.
Okay.
I mean, I also have examples here. So once we go down, right, I have examples where we can do
Okay,
analysis.
sure.
In real life, we basically do this as long-term planning. Let us say we complete this in last quarter, which is October, November, December, for the next whole year. I'm talking about when we do this for an MNC. In India, it will be January to March for the next whole year.
Yeah, exactly. So every year you set a target for yourself. And if there are any alternate opportunities based on the costing decisions that you make, you can choose alternate opportunities to maybe you want to relocate, or if you want to move operations from, for example, one high cost location to low cost location. All of that is done at the top, and then decisions are taken.
No, I don't think so. That depending on the agility of the organization as well, sometimes this is like a everyday task rather than an annual exercise, where most of the organization will have a defined, FP&A team, and
Mm-hmm.
they would regularly, literally look at Outlook, saying that what will be the landing
Mm-hmm.
of that specific year, or do a planning for the next year accordingly. So I wouldn't
Mm-hmm.
say that it is linked to a specific period. Uh,
Mm-hmm.
I work closely with the FP&A team, and in fact, they kind of do this day in, day out.
Okay.
Obviously, the decision making would be for different scenarios and different business conditions, but this is a regular exercise.
Okay. Okay.
Yeah.
Sure. Thanks for adding that. So there are, I mean, what is the definition of cost? And a lot of things are here, but I will skip this and I will directly go to this chart, which is crucial for us to understand. So there are a lot of costs that are involved, right? So how do we cluster them? And one best way of doing it is you can classify them as product cost and then period cost. So what is product cost, what is period cost is very, I mean, extremely crucial to understand. So you can divide this product cost into three parts. So here, if you see here, when you convert raw materials to work in progress to inventory, so you need labor who does this, you need material to do this, and there are additional overheads. So what are these additional overheads? Maybe you are running a mission, for that you need some servicing facility, or maybe you need lubricants for it, and these are additional materials and additional labor which are not like directly at the first layer getting into the product, so but still they are necessary. So you can classify all of these as overheads. There could also be some things like janitors cost, or maybe property tax that you pay, insurance that you pay to the plant, or the depreciation that happens in the plant. So all of them can be clustered under other costs. So you primarily classify them as materials that are used, labor that is involved, and additional overheads that you deal with. So all of this together is necessary to create this product, and this product is becomes an inventory for you, and you attach all these costs to the product, and it is called the cost of goods sold. And these period costs are something that is not directly involved in the production of the product that you are selling, but it has to do with, for example, administration or the corporate office or any other things, human resource, etc. So this is all sitting in a different place, and there is a building, and all of these costs are involved. So these are pretty much like not directly or pin to pin linked to the products that you are producing. So these can all be clubbed under another entity called period cost. So this is the typical structure of cost. So you can, any cost that you take in your profit and loss statement, it should fall under one of these.
What is prime and conversion cost? Sorry.
So if you just add direct material and direct labor together, it is called prime cost. On similar lines, if you add direct labor and manufacturing overheads, it's called conversion cost.
Okay.
So prime cost is basically.
Sorry, go ahead if you're not completed. Yeah.
No, please go ahead.
Okay, yeah. So I had this just a suggestion. Can we do it like take an example, and then try to link each cost with what is considered what? I mean, for me,
Sure.
I mean, it would be easier. And I don't know who does all these accounting. I mean, calculations in an organization. Say for a product called like manufacturing a car. So can we if somebody is here from the industry, can also let us directly correlate to that in the real sense. So it could be much more relatable.
Sure, let's do that then. Maybe, for example, let's take a simpler example instead of car. Maybe I can think of a mobile phone. So in a mobile phone, if you want to create this product, right, so you need a lot of raw materials. Maybe the display unit, you need the keys that are there, you need the motherboard, you need the chip. So all of this is direct material. So you are getting this, and it is direct material cost that you are incurring. And then you have a plant where you are assembling all of this and making it functional. So for this you have some people who are working on it, and for them you pay wages. This is direct labor. And then in that plant, for example, maybe you need screwdrivers to assemble the screws on top. So this is all indirect material. For example, maybe screws also come here, but screwdrivers maybe it would come here. Maybe hope I'm making sense. And for example, in that production plant, if you have cafeteria, restrooms, and security guards, so all of them also you pay, and it's directly for the production of products. So all that come here. And in the production plant where you are working, so you need to pay property taxes, insurances, all of them. These are all other costs. On the other hand, period cost is something like, for example, this is the production plant that you have for your mobile phone, but there is one more corporate office where people of the board and, for example, chairman, many of them are working. It's a work desk based things where business discussions, all of this happen here. So you need a separate space for it, and you pay salaries to them. You also rent this space. So all of them come under period cost. Hope that example was clear.
Yeah, much better. Thank you.
Okay. Anybody want to add anything on this? Okay. So if that is clearer, I think this is I think something very important where we use these concepts in and out to understand all of these ideas that are here. So here is an example. Of course, I am taking examples that were used for XMP 65, but I think similar ones would be there for you. I'm not going to solve each and every element here, but I'm going to explain the gist of what is done here. So this is an example to understand or classify the cost. In this typical organization, it is manufacturing cutlery knives. So what has happened is, worker works for 48 hours during the week in January, and he earns $12 per hour. But his only work hours is only 40, but his work for overtime, which is 48 hours. So in this case, what has happened is, for the rest 8 hours, he will be paid a different rate, which is 18 per hour. So if that is the case, then also let's understand in this 48 hours what he has done. So he has delivered his regular duties of cutting knives and handles, so that is 38 hours, and he has spent some time in cleaning the space and etc. All of these, and because of power outage, he was idle for 1 hour. So this is a scenario. Then the question is, I mean, these numbers are wrong. Maybe I will flash a better one. Just give me a second. I'll flash the correct one. Okay, is this visible now? Okay, I assume that is visible.
Yeah, it's visible. Yeah.
Okay, great. So now what has happened is in total he has worked for 48 hours. So in terms of employee, if you think, so 40 hours you have to pay him $12, and for the rest 8 hours you are supposed to pay him $18. So if you multiply 40 by 12 and the rest 8 by 18, you are going to get $624. So how do you divide this into clusters is what is explained here. So direct labor, if you see, he has worked for 38 hours. So this is the direct labor. Why am I calling this direct labor? Is this has gone into production of knives. So if you multiply this 38, which is within 40, you are going to pay him $12. So 38 into 12 is going to be 456. So this is something is the direct labor in this case. And manufacturing overhead is 1 hour. So this is something that is not directly gone into the production of the product, but it's a overhead. Because there was outage, he was sitting idle. So you still pay him $12 because it is within 40. So I'm putting this next to this, and it is 39 hours now. So you are still paying 12. Next, for the rest of the time, you have paid a premium to him. For example, 8 hours in this case, right? You have paid a premium to him. So the difference between 18 and 12 multiplied by 8, it is $48. So this you have given a premium to him, and the actual 12 into 9 is basically your indirect labor, because this is something like overtime. So this example, if you sum all of this up, it will become 624. So in terms of employee, it is 624. It is just a multiplication of 40 and 12, and then the remaining 8 and 18. If you do, you will get 624. But when you are doing costing, this is how you classify what is direct labor, what is overhead, and inside overhead, if you want to classify the elements. Okay, is this example clear, or anybody wants to add anything, or any questions on this?
Hey, what is that 12 into 9? Could you explain that again?
Sorry, what is?
12 into 9, the last line item.
12 into 9. Okay. So now what is happening here is he has spent 9 hours not in producing these knives, right?
Okay.
So that if you multiply it by 12, because the premium that you paid is already accounted here, so the remaining is only 12. So that 12 multiplied by 9 is
standard hours. Hour rate, standard hour rate.
Yes, this is a standard hour rate, correct. Because the premium that you paid is accounted here. So for indirect labor, so this is all indirect labor, right? So this indirect labor you are accounting it here.
Okay. Basically, the 10 you split it into 2 line items. One is direct labor and indirect
Yes.
labor. The extra 10 hours, 40.
No. All of them, direct labor is only when he is producing them. That is 38, which is clear. And that 38 is falling within 40 hours. So you only pay $12 for that. 12 into 38 is going to give you 456, which is the direct labor cost that you are paying. And all of the rest is manufacturing overheads. But if you want a split of what manufacturing overhead is, you can cluster this into these 3 elements and then do a calculation, and you get this.
Okay, thanks.
Okay. So if that is clear, then we will go on to our next problem. So this is basically classification. So I think Siddharth asked a question, right? So this is a good example where we can understand how do we classify. So the following cost data for the year just ended pertains as sentiment. This organization's previous data is here. So this table you can see, and we can understand why they are classified this way. So for example, direct material, I think it's clear that it's a direct material cost. Advertising expenditure is a period cost because it is not something that is used to produce the product. So it goes into period cost. Depreciation on factory, it is product cost, but under product cost it will be overheads. Under overheads it will be other costs. If you, I think if you want, you can keep a photo of this, take a snapshot and keep it with you, so that when we classify it's going to be easier. Maybe I can also put it in the chat if you need. So I put it in the chat. Please open that and just in parallel so that it will be easier for understanding. So first, direct material is clear, and advertisement is also clear. It's a period cost. Depreciation on the factory, it is product cost. Under the product cost, it is manufacturing overheads, and under manufacturing overheads, it's other cost. Direct labor wages is direct labor. So this one is a bit interesting. It says cost of finished goods inventory at the end of the year. So here, if you see, this cost is basically the inventory. So it is not a cost for us. So we don't have to classify them. Any questions on this? Or it's clear? I think it was intentionally used to confuse people, but if you understand that we are creating a product now and the cost of finished goods, the end inventory is not relevant. So we are not classifying them as anything. Now, indirect labor wages paid is an indirect cost, and supervisor's cost is again an indirect cost. Service department, indirect cost. For the direct labor, when it is paid as fringe benefits, these fringe benefits could be insurances or any other cost that you give, it's a direct labor and it is already considered. For example, you have to give this even if there is no overtime or they are not doing anything, so it is direct cost. Then indirect labor, if you do indirect labor and then give fringe benefits, it is indirect, which is clear. So supervisor fringe benefits is also an indirect cost. Overtime premium is an indirect cost. Idle time is an indirect cost. And administrative cost is a period cost because it is not coming to the product. I mean, you are not using this to produce the product. Rental of office space of salespersons, that is also not a product cost, it is a period cost because you are not, this is not something where machinery is run and product is produced. Sales commission, same thing. Promotions, same thing. So, classification is clear with this example, or anybody want to say anything?
We have a list of these things in the book or something, like production supervisor salary. I mean, on the first go, I would not know if it is indirect or not, right? Because a production floor supervisor is always there in all manufacturing units and stuff like that, right? So that's why I'm wondering, like, is there a list of things that we should like look at again and again so that it's down in your head?
Okay, for me, how I understand this is, for example, production supervisor, irrespective of the level of activities that are happening, right? I mean, how many products that are getting produced, supervisor more or less would be the same.
Yeah.
So you cannot directly map it to the product. In that case, I classify them as indirect.
You can also read it as.
Pardon me, administrative cost is known as period cost, but in the figure you told, other cost includes plant depreciation, property tax, insurance, right? So
Sorry, which one is speaking about?
Administrative cost, it is coming under product period cost, but in the chart, right, other cost will have plant depreciation, property tax and insurance. So administration usually involve I think these activities only, right? The insurance of plant and property, tax filing, etc., right?
No, as far as I think, administrative is more about for your organization to function. What
Okay.
is that you will have to put in place? So this, I think, is independent of the plant. So it mostly gets into the I mean,
Period
corporate
cost.
office where it's been handled.
No, so the administrative people have different salaries, right? Then it is kind of confusing. Like indirect labor, then okay.
So I think the summary is very easier. So where are you doing it? Is it something that you are doing in this production plant? Then it should be a product cost. If it is outside of production plant, then it is period cost. And inside of this, is that something? I mean, the payment that you are making, is it dependent directly on the products that you are producing? How many? I mean, for example, supervisor can be one, irrespective of the activity level here. Maybe you are producing 10,000 a day or 12,000 another day. So administrative, I mean, supervisor can be one. In that case, it's not a direct labor; it's an indirect labor.
Hmm. Okay. Okay.
So I think this should be very clear to us, without which we will not be able to classify. So we have to think what cost are we speaking about, and whether that cost is going to change because of the I mean, for every additional unit produced, is that cost going to change? If so, then it's direct labor. If not, it is indirect labor. And we should also see where it is expended. So whether it is in the corporate office or in the production plant, and then classify it accordingly. So this is my thumb rule that I have, but if anybody have any better thumb rules, I think it could be next.
Repeat that statement again. What did you say?
Because I wanted to add something. Just whenever you. I just wanted to add something to what you said about.
Okay, sure.
Last question.
Okay. So
But
somebody
you can
asked
answer
for
also.
yeah.
You just complete that.
So you want me to repeat this? This is what you want me to repeat, or sorry, I did not get the question.
You just said a statement in the end, no? How do you recognize which is direct? And you just said one statement. I did not catch that correctly. I had a phone call from work, so that's why I missed that. The last statement you were saying.
So what I was trying to tell is, so imagine a supervisor. So why am I not classifying that supervisor of plant as direct, and why am I classifying it as indirect? Is fairly simpler for me, because supervisor is going to be the same irrespective of the number of units that I am producing. I mean to say, even if there is an increase in the quantity produced or a slight decrease in the quantity produced, he will fairly be able to do the job. And it is not a one-to-one direct relationship that I have. But in case of direct labor, right, you need this many machines to run, so you need this many people operating. So this is directly you can map. So for example, for 10 units, I need 20 people and things like this.
Okay, got it. If there's a direct relation, you said it's a direct cost, and if it is not,
yes. Yeah. So that is how I classify for my better understanding, but there could be better ways also. And I also think it's organization dependent. Some organizations
correct.
based on
exceptions are always there. Yeah. Thank you so much.
Okay. So Vivek, you wanted to add something?
Yeah, just one thing. I mean, this the product cost and the period cost. So product cost is with respect to the product that we are manufacturing. In that
Yes.
There is direct material, direct labor, indirect labor. So if I were
Yes.
to take one example, just giving one small example, say there is a manufacturing factory. So there's a factory where goods are being manufactured, and there is the same company has an administrative office somewhere, say 10 kilometers away.
Yeah.
Now in the factory you have a labor who is working on the some production department, and in the factory you have one security guard, and in office, that administrative office, you have one security guard. Now this three, the person who is working in the factory production department is direct labor. The security guard of the factory is indirect labor. Indirect labor because that is the product cost. even though he's not
Yes,
working
correct,
directly
correct.
on the product, he is still associated with the factory. Right? The person who is there, the security guard in the office, he is a is a period cost. He does not come under product cost in any way.
Yes,
So
yes.
this is how regarding this, mostly we have trouble in this labor part. See, once you get started, why it is period cost, another is why it is indirect labor. So that's how I kind of thought of this example. When in class also it was, so this is how it is. So in the end, when product cost it is, when product you have to see this is with, in some way it will be related to the commercialization of the product. Whether it is indirect material, whether it is manufacturing overhead, that other cost you mentioned, as somebody pointed out, then why other cost is not period cost? Because that other cost, if it is like sales is not this not related to the this
Factory.
production of your product.
Yes.
So sales is will come in the period cost, advertisement cost,
Yes.
sales cost, any administrative cost. So those are all period cost. And if you see like period cost has no classification. All the classification are in the product cost only. So if you understand this product cost, then it will be easier for everybody else follow. So that is why I just wanted to add.
Yeah, I fully agree. Okay, Shashanka want to ask something or say something?
No, I just had a small comment on the previous topic, Kash, where we say the production supervisor cost, why it is indirect. So the product can be a mixed product, right? And usually when we go to manufacturing, it's a mixed product environment where the supervisor can actually inspect or be responsible for the multiple product lines. So that being the reason it is indirect, because we can't associate his salary to a very specific product. On the other hand, if the company is manufacturing only one product, maybe we can classify that as direct, because he's having only one job or one product to look at. That's why it is indirect. That's how I would take it.
Sure. Yeah, thanks for adding that.
Thanks.
Okay, anybody wish to add anything more or any questions? Okay. Then let's continue. Okay, I'm moving forward. So, some characteristics of cost. So, for example, we can classify them as fixed cost or variable cost. So, to explain this, maybe these charts are useful or handy. So, for example, fixed cost, you can see this behavior. So, for example, if you have a cable connection at your home, so irrespective of the number of movies that you watch, the cable charge that you pay is going to be the same. So it's a fixed cost for you. And if you want to interpret an advantage for you, the more movies that you watch, the cost per movie is going to come down for you. For example, if your bill is 100 rupees, irrespective of the number of movies you watch, then if you only watch one movie, it's going to cost you 100 rupees. But if you're going to watch 100 movies a month, it's going to cost you 1 rupee per movie. So this is the behavior of a fixed cost. And on the other side, if you look at a cost, okay, by cost, what I'm referring is all of these. Okay, so when we have to analyze, so we should understand whether these costs are fixed or variable costs. So it is important for us to make better decisions, which we'll see later. But this behavior, if we understand, it's going to be helpful for us. So on the other side, for example, you have for example, on YouTube, you pay total bill would be equal to number of movies you watch. For example, 100 rupees the cost of the movie. So as you watch more and more movies, your bill is going to increase. But per movie, you are still paying the same 100 rupees. So variable cost will normally behave this way, and fixed cost behaves this way. Any questions or anybody want to add anything on this? So what are we trying to do is basically trying to understand the behavior of the cost and how this cost would play around for us in our profit and loss statement. So there are other definitions or other classifications. What is opportunity cost and so many things. I'm not gonna touch all of these. I will share this, but you can go around and then see how it works. But let's take an example here to understand these cost behaviors. So in this example, this vineyard has some data for it. For example, what happens is, so if they produce 10,000 bottles this year, or if they produce 15,000 bottles here, or if they produce 20,000, in each of these cases, you can see how costs are behaving. So for example, fixed cost and administrative cost, this is the same. So the more you produce, it is helpful for you. And even production cost, for example, running these factories, all of this, it's going to be the same. So this, on higher levels, you're going to make benefit out of this because you're not doing anything more. For example, in a small software industry, for example, if you have an employee whom you are paying $1 lakh a month, then irrespective of how many deliveries he makes, you are going to still pay him 1 lakh. But if you can find somehow a means to get him higher deliveries, then you are making benefit out of it. So in similar lines, even in this vineyard case, these costs are not going to change irrespective of the activity levels you are operating. Whether you are producing 10 or 15 or 20k bottles, this is going to be the same. But there is some variable cost that is involved which will vary. So for example, if you produce 10,000 units of bottle, then variable production cost is going to be 7,000 here, 55.5 here, 74.0 here. And the sales team has told that if they can produce 10,000 bottles, they can sell it at $18. But if they can produce at 15,000, then they can work on selling it at $15. If it is 20,000, they can sell it at $12 a bottle. So this data is given to you. So you will have to see, the question here is mainly, so at what activity levels, these are called activity levels. So at what activity level you have a profit maximization? That is the question that we are trying to answer today. So the solution is here. So what we will have to do is, first you have to take, let's first classify the cost. So this, is it a product cost or period cost?
Period costs.
Yeah, so let's take this out first when we are doing costing. So let's take this out and let's do this. For example, for 10,000 bottles, if your variable production cost and fixed production cost is so and so, you add this up and divide by 10,000. So you are going to get $13.7 per unit as your cost. And then for this also you do the same thing, you are going to get 10.37. And here also if you do, so it is 8.7. Naturally, since our fixed costs are pretty much the same, right? This fixed cost is same here in this case, only variable cost is changing. As you produce higher volumes, then you are going to get cost benefit. So higher you produce, the cost of production is going to be cheaper. It is like cheaper by the dozen. They are producing higher activity levels and they are getting cost benefits. And on the other hand, you have this information 18, 15 and 12, right? So this is the price at which they can sell the products. So if you just multiply this multiplied by 10,000 or 15,000 or 20,000, so your sale is going to be 18, 22.5 and 24.0. If you want to calculate the profit, then it is sale minus unit cost multiplied by this, and then you have to subtract this administrative cost. Then you are going to get 3,000 here, 29.5 here, 26 here. So in terms of total profit for the organization, this is beneficiary. Though if you see, they were able to produce this cheaper because of the nature of fixed cost of administrative costs. This is adding more value to them. So they can decide to produce 15,000 bottles and still take benefit out of it. But which is cheaper to produce? Yeah, it is cheaper if you produce 20,000 bottles. But if you can only produce this much and still make this sale at this rate, then you are going to make a profit of 29.5k, which is better. So this characteristics of variable cost and fixed cost is playing around here, and for us as management team, we will have to understand this and then see at what activity level we are making more profits and take calls accordingly. we should not just go by the unit cost, but we should see the holistic picture and take a decision. So this is the gist of this problem. Anybody want to add anything or want me to repeat for some reason? Or did I?
Akash,
you want me to repeat?
so for the calculating the total cost, which is for first case 177,000 and others, you have not considered the fixed selling and admin cost, or you considered that also?
So here, in this case, it is, I mean, this total is given, this is the problem statement that we have.
Okay.
But when I
So
am
it's
calculating, here it is considered in the problem definition, but when
Correct,
I
yeah.
want to calculate the unit cost, right, I don't have to consider this period cost.
But while calculating the profit, you consider, I believe so, right?
Correct, correct, yes, correct. For calculating the profit, you consider it, yes.
Okay.
So this period cost is not directly going in, this fixed cost, the selling and administrative cost, is actually not going into the product directly, right? So this is a period cost which is outside the production center. So we have to take it out. So that is why we initially classified these are product costs, this is a period cost. So we'll take that out when we do the costing, and then when we have to compare, when we have to realize profits, then yeah, you take this and subtract and then see what is beneficial for us.
Okay.
Akash, I have a question. So while realizing this profit, we neglected the variable cost. Could you tell us? Tell me what is the formula of calculating this profit again? This total.
In this case, your 10.37 is your unit cost, and you are selling 15,000 bottles. So this is your sale value. So multiplication of these two, correct?
Yep.
15,000 into 10.37. So this is fairly clear. Now, what is that we are expending? So out of sales, you have to subtract a lot of things. What is that you are subtracting? First thing you are subtracting is basically this unit cost. So 10.37 okay. Sorry, I think I did a mistake. So this sale is basically 15,000 multiplied by 15. So this is 225,000. Then you have to subtract. Take an Excel sheet. It's going to be easier. So here, unit cost is 13.7. Let me take this out here. 13.7, and the active count is 10,000. So this is then sale. Selling price is I think it's given as 18. So this is the data that we have inferred, right? So if you have to calculate sales, it is just a multiplication of this and this. This is clear. Then product cost for us is this multiplied by unit cost. Period cost is anyways given as I think some 40,000 or something. Correct. So your profit is basically a subtraction of sale minus expenses or cost that you.
I think that is 13.7, the unit cost.
Okay. Yeah.
Or even you can simply minus the total value.
Yeah, that's possible, but I'm just trying to deduce it and explain it.
Okay, yeah. So basically all the revenue what I have generated by selling my products, I have to subtract everything that is required to make those products running or period or variable or whatever. And then whatever is left is my net profit.
Correct.
I was confused in the PDF. Can you go back, please?
Yes, I'm open. Yeah.
The same. Similarly, I mean, we have done the calculation for 20,000 and this one.
Yes.
Okay.
So then basically, why are we not considering the SG&A into the unit cost? Because eventually that's deducted from to get the profit, right?
Which this one, selling and administrative cost.
40,000, yeah.
No, that is considered. So that is what I showed the calculation here. So
For profit you have, but for unit cost you have not considered.
Yeah, that is not directly. It's not used for production, right?
Yeah, but still is an incurred cost, right? So essentially,
I engineering mindset is what I agree, but costing is done this way.
Okay, because we also had a similar discussion in our company also, but anyway.
But I think the gist is
gist is the profit. Right. Yeah.
No, profit is fine, but when you are doing the costing for your product, right, you don't consider period cost. But when you calculate your profits, you have to consider. So that is the
Maybe there's a question always right, they tell like overhead cost. There is a percentage which many industry operate on.
Yes.
So they have a thumb rule, like if you are in this type of industry, this is the percentage which range you are operating. So that's why it doesn't affect the product cost directly, but the profit margin will have it.
Yeah. So I think therefore overhead we have examples to go through and understand. But the summary of this is because there is a characteristics that is assigned to variable and fixed cost. Your unit cost and unit cost levels and profit levels are being very different. So if the aim is not just to produce the cheapest product, but also to be more profitable, meaningful profit. So even if you produce at 8.7, because of the cost behavior you have, you will not be able to make profit as you are doing it here. So going back, this is the behavior. Because of this behavior, they are all acting all at once here, and it's going to show us this. Okay, I think we've already completed 1 hour, so I will try to rush. So these are different definitions of cost. So I'm not going to explain this, but I'll definitely share these notes. You can go through, and if you have anything to discuss, we could discuss. Okay, let's get into another problem. So why do we do costing? I think is fairly clear. So here in this sheet, I said, so we need data from the previous year. We use this for the next year. For example, somebody orders something, I cannot tell I will start producing it, and at the end of the year I will look at my cost and finally divide it into the products that I have produced and then tell you the price. That is not possible in legal world. So what we do is we take the baseline of previous year, see what is this overheads coming up to, and then attach that overheads to the product that we are producing and the request that has come, and then quote a price. So this example can be seen in this case. So what is happening in this organization is this is the data from previous year. So they have professional fees, administrative fees, travel, photocopy, and there are so many fees that are they have expended out. And in that, right, they say in this professional staff salaries, 80% they are able to trace in the sense, for example, they're having like 20 different projects. Then 80% of the cost that is spent, they will be able to clearly tell whether it is for this project or that project. Similar lines, administrative cost, 60% they will be able to tell. Travel cost, 90% they will be able to tell. Photocopying cost, 90%. Other operating cost is 50%. So they are able to trace this is what they are trying to tell. Now there is a new, this is the past year data. Now this company has got a new order or a new project where they will have to spend this much for the professional fees, administrative fees, travel, photocopying and other costs. So all of this coming up to 50,000. So they also want to know how much of overheads based on the past data, how much overhead to add here, so that we don't book losses. So if you see here, they were not able to trace 100% of this cost to project. So there was some portion that was left. So what we'll have to do is we can do a box product of this. For example, this into this, 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 then you get 2500000. So this much is traceable, and the remaining basically 3.2 something minus 2.5 something is 0.7. So this you are not able to trace. So how much you are not able to trace in total is basically a ratio of this divided by this if you do. So on an average 28% of the cost in your organization you are not able to trace. So if this data is available with us, we can simply say for Martin's new project that has come, you just multiply it by 1.28, then you get the actual cost that you are incurring. And then they want to add a profit. So profit also you can see, for example, out of this they want to have a profit of this. So if you take a ratio of this, it is coming to 20%. So this multiplied by in this case 28 multiplied by 20% is going to give you 76,800 as the cost that you will have to bill Martin's project. Did I go fast or is it clear?
Can you repeat one more time, please?
Sure. So for example, in this organization you have past data. For example, 2022 you have this data, and they say that there were various costs that were expended in this organization, and they were able to map these costs 80% of the time to projects. But 20% of this cost they were not able to map to any project. They have spent this money, but they don't know to which project they have expended this out. On similar lines, this, they were not able to trace it. So how much they were not able to trace on an average, if you have to compute, what you have to do is you take a box product of this, and then you will get a 2.7 something. So if you see the difference, which is I think in this case 70, 2.5 you get, and 70 you are not able to trace it. So 70 out of this you are not able to trace on an average, which is coming to 28%. So for this in the past year you are not able to on an average track 28% of your cost. So what you do is for any new project that you come in, right, you just multiply it by 1.28, that will be your actual cost this year.
Okay, understood.
But that will be for overall cost, right?
Yeah. Basically, we are looking for a actual cost of the new projects. So since we know 28% I'm not able to trace, I will apply the 28% for any new projects. Right? Is it a fair understanding? Okay.
Yes.
And then
engineer's mind would think like this. So 80% I'm able to trace, in this also 88% I will be able to say, why can't I do this mathematics here and then do a multiplication and then manage it? Yeah, that is also a possibility, but to keep it simpler, it is not done that way. You take the overall traceability and then apply that overhead to this. Hope it is clear. And then there is a second part of the question. The second part of the question is they want to target a profit of 640,000. Okay. So this 640,000 out of this is 20%. So to that value that you get, after you multiply it by 1.28, they want 20% profit. So multiply it by 1.2. Then that will give you the cost. 76,800 is what you have to bill to Martin's project. Any questions here? Okay, I hope no. Then we will move on to slightly complex problem. So in this problem, it's slightly jumbled up, but I think it will make more sense if we debrief it. So in this first I will explain this. So okay, we have quoted this much to Martin's project, and end of the year we see that this overhead is not 25 but 28%. Actual values, if you see, it is only 26%, for example. Then what happens? You have made more profit. In this case, it is called over application of overheads. Or, for example, if it is going to be 30 in this year, then you have under applied your overheads. Is this definition clear? So what you do is at the end of the year, you adjust your cost of goods sold with this number. So if you have over applied, take that value out. If you have under applied, then add that amount here.
Hello.
And then you will be able to make a real profit and loss statement for your organization.
Akash, can we rewind it a little? So this markup 20%, this I'm applying on which cost? Is it like overhead including cost or my?
This is your traceable cost, which is 50,000. On that you apply 28%. That is overhead, which is 14k. 28% of this is 14k. So you add these two, get 60,000. You need a markup of 20%. So markup of 20% of this is 12.8.
On 64 you applied, huh?
Yes.
So my total cost, okay, whatever profit I want, I'll apply on the total accountable plus unaccountable cost.
Yes.
Okay, yeah, got it. Thanks.
So at the end of the year, if you come back and see how much you have spent, maybe this overhead, right? You have applied 14,000, but it can be either 13,000 or 16,000. If it is 13,000, you have over applied your overheads. If it is 16,000, you have under applied your overheads. So because of you not anticipating this properly or predicting this properly, you have either made more money or less money. So in the next year, you fine tune it further. Okay, so we will move on to a slightly complex problem. So in this problem, again, this is a situation where you have got data for the previous year. So previous year, they thought that the budgeted manufacturing overhead in two departments, in machining department and assembly department, would be this much. But at end of the year, if they see, it's actually little more, and it is little less here. And they've also budgeted how much should be the direct labor cost. So here it was this much, but end of the year, if they see, it's actually lesser. Machining hours, they plan to run the machines for this many hours, but end of the year, they see they overshoot it. So this is the data that you have got from the organization for previous year. And then this is that one of the job is not complete, and this job is having direct material, direct labor, and machining hours of so and so. So in this case, the requirement is you will have to do a costing for this, and then you have to see whether you would have applied over application of budget or under application of budget. So how do you do this? Is cost driver. So you have to understand something called cost driver in this case. So here, if you see in a machining assembly, then what happens is the cost driver is the machining hours. So number of machining hours increases, then the manufacturing overhead would also increase. And in an assembly plant, which is labor intensive, if the direct labor costs increase, then the assembly cost will increase. So far it's clear. The cost driver, what is the cost driver? Okay, I assume it is okay. Then what I do is, in the last year, what I have seen is, for example, ignore this line, which is actual. If you see, I had anticipated of running my machines for say 4 lakh hours, and then I was assuming that I will have to spend out this much of amount, which roughly means that if I run a machine for 1 hour, then I'm going to spend 10 rupees. So that is the assumption which I started initially. But if you see the actual machining hours, right, we have run this much, and we have actually spent this much. So if you see, my budgeted money was 10. Why did I tell 10 is for this number divided by, so it is 10. So I had budgeted 10 rupees per hour as overhead. But actual data, if you see at the end of the year, so it is 10.02. So there is under application of overheads in this case. So if you do the same thing here, right, it is over application. So the same thing is explained here. So budgeted rate was 10 here. In this case, it is 55% because this was compared. So that 3.08 on 5.6 is basically 55%. Then this job, let us consider this job. So this job, right, in the machining it has so much of cost. In the assembly it has so much of cost. Then if you apply this overhead, so we have to apply overhead. So applied overhead is 10. So it also says that it was machine hours was 3,360. So applied overhead is into 10 rupees, which is 3,600. On similar lines here, direct labor was this, and overhead was 55% of this. So if you add that up, you get this here. So this, all of this together is your machining cost. All of this is your assembly cost. If you add this and this, the total work in progress, this job which is left incomplete for this year, is worth so much. Any question about costing work in progress? Or anybody want to add anything?
Akash, can you repeat that, please? The call dropped for me.
Okay. So in this case, this job, we are trying to assess what is the cost of it. So what we do is, we know this budgeted overheads. We just now calculated this number here divided by this number is going to give you 10. And on similar lines here, the cost driver is this number. So you divide this by this, you are going to get 55%. Then come here, and then when you are assessing the cost, so these two numbers are directly given to you, but overhead is what you have to apply. So how do you apply overhead? Here they have told it is 360 hours of machine hours is necessary for this. So if you multiply by 10, which is the cost that you have planned as overhead, then it's going to cost you 3,600. On similar lines, if you take 55% of this, it's going to be 32,000. So if you add all this up, you're going to get this work in progress of machinery and work in progress for assembly, you get this much. If you add these two, this is the total work in progress that you have.
Okay.
Okay.
Thanks.
So then we have to do an analysis of whether we have done a over application of overheads or under application of overheads. So applied overhead is clear. So we wanted to apply this much overheads here, and the actual overhead is coming up to 42660,000. So if you see, in this case there is a under application of overheads. Here there is over application of overheads on similar lines. So net to net, if you add them up, there is over application of overheads. So at the end of the year, you have to update your cost of goods sold with this value so that it is more meaningful. Okay. So if that is clear, then I think let's get into.
Akash, I had a question for that. I think the question asks what percentage of overhead is charged to work in progress. So, so is that to be a ratio or?
Yeah. I think I have not computed that. That should be a percentage. Yes, we have to.
Okay.
For example,
So basically, yeah, that's the question I had. 1 second, let me just look at what I did. So that is the overhead that you calculate divided by the total work in progress. Total overhead divided by total work in progress.
Yes. So you have to take that ratio and you get a number.
Okay.
So how much over application or under application you have done?
Okay, thanks.
Then, okay, that being said, there is some more class, next, I think this problem, if you can spend more time and understand, it's going to give you what is over application, what is under application, how it is computed, and what is a cost driver. So these three things are discussed here. Next, let's get into estimation methods. So cost behavior are of various types. So here, if you see fixed cost, we already know. Irrespective of the activity level, the cost is not going to change. But there are some costs which behave like this. So as the activity level changes, the cost also changes. And there could be also variable cost, which we explained. There is something called step variable cost. So it is like a smaller steps that you take. And there is a combination also. So some cost will be fixed plus variable cost. This is called semi-variable cost. So I mean, if you take subscription, then it's gonna cost you so much. For example, Amazon Prime, 1,400 or something per year, and then for every movie that you want to watch, additionally you want to pay this much. So it's a combination of fixed cost and a variable cost. And there are also few costs which are like curvilinear. So curvilinear in the sense, so it is actually a curve, but in some activity range that you are operating, this cost is going to be a constant or a linear one. So this is the kind of cost that you see normally. So when you are doing costing, when you have multiple cost classes, it is important to classify them as one of these, so that we will be able to take better discussion or judgments for the upcoming year. So then there is, I think this problem I'm going to skip because of a shortage of time. Maybe we will move on to the next topic. So for example, here, this was fairly simple. You can look into the behavior and say, but in some cases, you don't have a clear understanding of whether the cost is linear cost or fixed cost or a variable cost. If you have these confusions, there is one more approach. So what you do is, at various activity levels, you take the historic data and plot them. And once you plot them, you can create a estimate of this. For example, you can write a scatter diagram like this and then draw a line. So this is the behavior of your curve. After you get these activities and then you draw this, then you can see that it's actually a semi-variable cost. It has a fixed cost attached and there is a variable cost attached. So this you will be able to interpret after you get the past data of your organization. And there is also a technique called high-load technique. If you are arithmetically inclined, 2D geometry, if you remember, if I tell you two activities, for example, in this case, right, if I tell you it's this point and this point, one more point here. If I tell you these points, can you do an estimation? It's a 2-point estimation. So maybe mathematically it's y is mx plus c. So you have to use a straight line equation, use these two as geometric coordinates. And once you do this, you get the slope and you put the slope back here, then you get the equation and then you get a fixed cost. This is the variable cost. So you can also use two-dimensional geometry to do this. Being engineers, I think it's fairly easier for us to understand this. So if you are given with various data points, you can plot them on the graph and then draw a line, which is more meaningful, and then draw an equation and then say this is how your cost behaves when your activity level changes. Or if you have a 2-point reference, then use this equation of straight line and then you can substitute it here and then you get this fixed cost and variable cost data. So in this example, if you say at 9,000 activity levels, my cost is going to be this much, and at low levels my cost is going to be this much, then if you substitute here, what you get is you have a fixed cost of $1,600 and per unit you are actually incurring $0.9 worth of cost. And in case if you are not able to get this or this, you could also go with linear regression. Maybe in statistics you all would have studied. So if you use linear regression of various data points that you have collected, you should still be able to get a straight line equation. It need not be straight line as well. It could be a curved line or a multi-dimensional line as well. So multiple regressions are also possible, or this least square method is also possible. So or there is this ingenious way where we don't make a equation like this. We divide the activity the process that we are doing into smaller activities, and we add the cost of each of these and then sum up to the total. This is going to be most accurate one, but it's going to consume a lot of time to do, and you need a lot of data to do this. So industrially, I think nobody uses this. So the most popular ones that are used to understand the behavior of the cost is either fixed cost, step fixed cost, variable cost, step variable cost, semi-variable cost, curvilinear cost, or this scatter diagram, or you use a 2-point method, or you use linear regression. So far, any questions, or anybody want to add anything? then we will move on to cost, volume, profit analysis. So this is the next part of what I wanted to share. Maybe we'll take a short 5 minutes break and then come back. Okay. So 8:27 will be back.